Markets swung to a loss to end the week after a weaker jobs report and the prospect of more tariffs. So it was a volatile market week from tariffs last weekend and now the prospect for more. Meanwhile, it was also a jobs week with the January jobs report today. While the S&P felt like a roller coaster all week, it ended just slightly lower. So let's quickly recap. Monday fell after tariffs on Mexico, Canada, and China were announced over the weekend. Then Tuesday saw a recovery with Mexico and Canada's tariffs delayed, while China opted to retaliate. Wednesday floated higher, led by AI, bolstered by higher Google data center spending plans. And then Thursday rallied as well on more positive earnings. Finally today, Friday, we started stronger on a more muted jobs report, but sharply reversed as the White House announced more tariffs are coming next week. So let's start with jobs. In January, we added 143,000 jobs, a sharp decline from December's 307,000 and below forecast for 168,000. Meanwhile, unemployment fell to 4% and hourly wages grew 0.5% month over month. Markets welcomed the muted jobs report, but did note the faster wage growth and its potential impact on inflation. With rate cuts on pause, the jobs data is a double-edged sword. Markets are looking for slightly more muted labor conditions to put pressure on the Fed to resume cuts. And then tariffs. Just when you thought we moved past them this week, the White House announced additional ones to be unveiled next week. Not a lot is known, like what's on tap for which countries, what's the scope, how big are the tariffs. However, the White House did signal they'll be more reciprocal in nature. So they may be lower in scope compared to last weekend's, but that's still mostly just speculation at this point. It was, though, enough to sharply reverse the early market gains today with the uncertainty. This is something we'll be closely following into next week. We could see more market pullback depending on the scope, but also recovery if lighter or delayed with more negotiations instead. So we'll see.